Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. If you need help with anything, check out finding-value.com. That's where I dive deeper into all of these sectors, topics, looking for potential investment opportunities, which is marrying the technicals and the fundamentals together to find those opportunities. If that sounds something that you're interested in and learning that process, we do have a Mayday coupon code, MAYDAY, one word, which can give you a discount. You can try it out for 1 month, 50% off, and try it out. Or if you like it, you can sign up to the yearly membership using that discount coupon code for bigger savings. So let's dive in there. Let's take a look and see what's going on today. We're going to start with the DXY. And what do we have? Continued strength in the DXY. What are some things that I might notice? Well, if you've got an election coming up and you don't want commodities to go higher, one thing you can do is push the dollar higher. That has occurred ever since September 30th of 2024. It's been a pretty steady stream of increasing dollar. So we've got a strengthening dollar. And when the dollar strengthens, commodity prices can be muted for a period of time because you've got your denominator that they're priced in, hauling ASS to the upside. So we've got that momentum. It's still intact. The big question I have is, are we going to break through this resistance area? The reason I ask that is because maybe we continue higher, where this is kind of a false breakdown, this area here, and we break and move on up. A lot of people are looking for a weaker dollar, so they're looking for the turnover here. I can't tell you what it's going to do in the short term here, but we will continue to monitor it and watch it. The thing that generally drives a weaker or stronger dollar is generally interest rates. A stronger interest rate behind the dollar versus a interest rate that isn't as strong somewhere else is giving you that differential in the DXY. So it's usually the monetary tightness or looseness that determines the strength or weakness of a currency. The 2-year yield is up today, 0.91%. Pretty big move to the upside, but it's still within the channel for the 2-year. We've been stuck in this channel here, roughly going sideways. You could even maybe do something on the lines of that, but we're moving sideways. It's still bullish at this time, and I don't see a reversal candlestick yet. We have larger moves on the long end of the curve. So we're up 1.94% today, and yesterday I said that this is a small little candlestick with not a lot of follow through. And we got strength today behind it, so we very well could end up going higher again. We also have that on the 30-year up 2.26%, and that momentum is continuing to the upside. Big bullish engulfing there, where we could potentially head higher in the short term. The reason this is important is because interest rates, at least for the most part, determines valuations for stocks. Stocks are a derivative of the bond market and the interest rates. And generally speaking, growth stocks get hit and usually sell off when interest rates go up. And we haven't really seen that yet. We've seen interest rates heading on higher here, and stocks have been moving up at the same time during this election cycle period coming up here. TYX TNX ratio, we are up a little bit, which means that the long end of the curve, the 30-year and 10-year, this is the 10-year there, and this is the 30-year here. We had the 10-year go up less than the 30-year, which is uninverting the curve, but it's doing that with interest rates going up. And it looks like we will continue to go up in the short term. When this goes up, that's generally when precious metals do well. Bond prices are heading lower. This is a bearish candlestick on the monthly candlestick. We dive into the shorter term, and we've got a lot of support. We're bouncing around the support level. Just above it is where we're at for bond prices. Yields going up is inverse of bond prices going down. The 2 and 10, we have a little bit of the uninversion of the curve. So the 2-year went up less than the 10-year. So think of the curve uninverting when the 10-year goes up more than the 2-year. So this being going up bigger brings that curve lower. So the curve is flattening, or I should say, it's, since we've already flattened, it's uninverting because the 2 years at 3.97 and the 10 years at 4.1, basically. The curve is uninverting and the 2 years going down in relationship to the 10-year. If that continues lower, that's generally when we see these market slowdowns in the system. Gold up 16.5%, does not care about the strengthening dollar, does not care about the increase of interest rates. That's pretty bullish for gold, guys. Pretty bullish for gold. Looks fantastic. Silver down a little bit. We've been trending sideways here, had a little bit of a spill out. And we've got kind of like another kind of squeeze. Maybe we come back here again around $30. Scare people out of it or bore them to death with consolidation sideways. But I still think we're going to go higher with time because we are sitting on top of the pattern. We're sitting on top of a breakout. Gold did the same thing. We were sitting on top of the breakout for a couple of months. We broke this big pattern here, and then we sat there for 1, 2, 3 months. Then we broke out on month 4 and have this gigantic move. We could be doing something very similar in silver, where we came and broke out of it, sat for 1, 2, 3, 4, 5. We're kind of sitting on top of this breakout here before a potentially big move occurs. Platinum working our way up a little bit, $2.3 an ounce, still below the pesky trend line. Like to see it break. This is generally more sensitive to the inflation in the system. It tracks oil quite well too. Palladium up $21 an ounce, up about 2%, looking pretty good. Feeling good. Bouncing off support. You're getting these lows coming up a little bit too, getting a little bit of strength. GDX up 1.2%, GDXJ up about 1.2%, and SILJ up a little bit less. We are sitting on top of a lot of these support areas. But the progress is up. It looks good for all of those. Slowly working its way on up. XEU to gold ratio up slightly, but we haven't had any sort of launch period or anything like that. We were at these incredibly low levels. And a huge opportunity down here to go long on the gold and silver mining companies. If we see a break to or move to the upside, that means the gold and silver mining companies are going to start to outpace gold. Gold's been moving higher. It's going to impact the gold and silver miners' balance sheets in a positive way. Oil's pretty low too. So this is the time for margins to really increase for gold and silver mining companies. Crude oil's up about 0.5%. We got yanked down here, and we don't really have a ton of selling pressure. Buyers equal to sellers. That's why we've got small little candlesticks here. The opening and closing price is roughly the same. We're at support. We'll see if we can generate some positive momentum to the upside. The news, the inventory draws, all of those things are positive for the price of crude oil to go higher. I think the fair value is probably somewhere up here. If you were to do a dot plot of commercial inventory levels, it's probably in the low to mid $80 range. So why is it trading down here? All I can say is see, and I know that it is very important for gasoline prices to be low for the elections. TTF gas up about 0.9%. We're right underneath resistance, trying to break out. We're coming on up, squeezing into the corner here. And I do think it will try to break to the upside. Natural gas in America continuing to head lower. We've got support underneath us at about 2.25. Boy, XOP, yeah, you know me, up 0.96%. We're seeing some positioning in the oil and gas equities. So it looks good. We're still above support, and we'll see if we can gain some traction to the upside. Will that occur before oil goes up? I don't know. We'll have to wait and see. We've got OIH moving sideways. It's holding on. And that has also been impacted by the lower crude oil prices. Newcastle coal futures right at resistance support. And we're flagging out a little bit, and we'll see if we can eventually break through this thing and start our way on up for Newcastle coal futures. Sprout Uranium Trust moving sideways right at resistance. There we are coming up into resistance. I haven't really changed this. This is a big flag pattern, guys, if you notice. You see that flag there? It is a big flag. The bigger the pattern, the bigger the move. So if I were to throw this here and then maybe throw it on top, results in a pretty big move, in a very big move. Almost a doubling of price. So that looks pretty good. So we'll see if we break out, and it might take a little bit of time. Just be patient. The uranium price continuing to go higher, very slowly, just grinding on up, looking good. URA up about 1.2%. A little bit of selling pressure. We got a little red candlestick there versus its opening price, but still looks good. Still looks good. URANIUM doing the same thing, right at resistance. And URNJ right at resistance too. We're right there at that resistance line. Looking at copper pulling back. The momentum is still to the downside. I don't see it squeezing up yet. You could maybe say that we got a little bit of a squeeze going here. Maybe. Where you kind of draw it like this. A little bit of a squeeze, perhaps. We'll see. Downward wedge, and we'll see if we get support here. We've got COPX down a little bit too, and I can see a little bit of a wedge growing there. It's wedging to some degree. What that means is that the buyers are equaling the sellers. It generally puts in a wedge formation. It is downward facing, so it's located downward, and that's where we want to see a break. So I think this looks good, and think of this as these big flag patterns, and then this size is your projected move upward if we do break. Iron ore up a little bit, and we are still just in this general location here, squeezing up against support. So that looks good. Aluminum down 1%. We just can't get through this resistance area yet. We're struggling. We're still in the channel. Nickel down just a teeny bit. I think this is still going to go up. Notice that the downward moves are all very small. So whenever you get these big moves and then it flags out, consolidates, and then works its way on up. So it still looks good for nickel. Mu down just a teeny bit. Again, I think this looks fantastic. Big buying pressure, small selling pressure. It's that stair-step pattern that we have going on, and it is above support down here. That's your support region. The squeezing up against support, the breakout. We're just kind of moving sideways in the short term. Eventually, this will work its way on up. That's what I've seen historically. Emerging markets down just a little bit, still looks good. Big green candlesticks, small red candlesticks. It's got the ingredient. Continuing higher, that's breaking to the upside. I drew this thing quite a long time. It was like over here. And I drew this in there. And look at how this just worked its way on out. That's beautiful. Tan down 2%, looking like total garbage, feeling like garbage, looking like garbage. It is garbage. Heading lower potentially. Probably from higher commodity prices and solar. What it did is it gained all of its pricing pressures off of cheap interest rates, which is cheap credit, cheap commodity prices, and cheap energy prices. Commodity prices have been going up, and solar just can't make any money. They can't. It's not a viable alternative, in my opinion. That's why they cannot make money. That's why it looks like garbage. Lithium moving on down, and I do think we could potentially come back to the breakout. I've been patient here. So The momentum is still to the downside. I hope we get here because that means I'll have some money in there to do some attacking against some good companies, hopefully. REMX also heading a little bit lower. I don't see it squeezing up. There's no defined pattern here. But we could come all the way back to this breakout here at about $41-ish. We've got Baltic Dry Index heading lower. Looks like it just kind of playing around with the support zone here. XHB, the housing market, or home builders, I should say. A little bit of selling pressure there. We're up against this resistance area there, right on top of it. We'll see which direction it chooses here. Russell 2000 down just a teeny bit, little bloody nose to continue higher. Looking good, feeling good. We've got SPX down. This is flat, basically flat, and they have their work cut out for them on the plunge protection team. Nice big. You can see the selling pressure coming in. We broke out, came back up for the retest, broke back down. Plunge protection teamed it back up. That is my opinion for the elections. And these generally coincide, these moves lower generally coincide with the yield curve that is uninverting, which we have, and the unemployment rate going up, which we've got. NASDAQ also doing something very similar. We've got rising wedges all over the place here. If the plunge protection team is in there buying this, and this to me looks like a top, a Batman pattern that turned and plunge protection did up. And now we've got rising wedge, all of these rising wedges as the insiders offload shares all over here. The Bezos, the Gates, all of those guys. And here we are in the corner here, throwing these bearish engulfings all over the place. We'll see what this does here in the short term. I would be curious if we just go sideways, if they try to pop it higher. I say they because I don't believe that I don't think this is naturally going up. I don't think people are just going in there. I think it's being forced, in my opinion. SMCI heading a little bit lower, getting some selling pressure, which is a bearish engulfing. We're kind of waiting to see which direction this thing goes. This can be a potential flag pattern that breaks lower because it is angled upward slightly. And it's not angled like it doesn't have the, how can I say it, the structure. Usually bullish structures, they're kind of rounded. Like you get kind of like a rounding period here. That's a bullish structure. It kind of has it, but it kind of doesn't. So, and you don't really see these bearish engulfing candlesticks show up on the right-hand side. So we'll see where it goes. But momentum's downward, and I think that this is upward facing. And I think we could potentially head lower again, which is an outcome of that bearishness, the yield curve uninverting, unemployment rate, all that stuff. NVIDIA up 0.89%. It is up there. We'll see if it can keep going. Bitcoin down a little bit, right on support of this big pattern there. And it does look bullish to me. Not a ton of selling pressure. Big moves up. Usually most of as you come up, your consolidations are downward facing. And that's when you see it go on up. See how they're slightly angled downward? On the move lower, they're going to be facing upward. As you come down, upward facing. And then what's going to happen is it's going to change and then bounce like that as your bottoming pattern, and then you reverse it. The pattern that we have today in Bitcoin is downward facing. So we'll see if we can get a move higher out of Bitcoin. Ethereum also looks pretty good. You have a downward facing. These are all downward facing deals there. And we'll see if we can get some momentum in Ethereum to the upside. Downward facing, break higher. So that looks good there. If you guys like the content, give me a thumb up. Subscribe to the channel. Subscribe to the website if you guys like all of this technical analysis. I also look at the fundamentals of companies that I go into. I'm a hybrid investor. Marry the two together. The fundamentals drive the long term. Fundamentals drive the long-term charts here. They drive everything on the long term. The short term is driven by news, market sentiment, emotions, driven by anything. Anything can drive it in the short term. You can make up fundamental reasons. You can make up emotional reasons. You can make up, wide market changing dynamics that impact all the sectors. There's all these things that you can make up of why stocks are sold off or purchased in the short term. Longer term, it's all fundamental driven. Supply, demand, credit expansion. It's in favor. Some of these sectors, they go into favor for a certain time frame, and then they go out of favor for a certain time frame. And those time frames are generally, say, 10 years or so. So it's in favor and out of favor, and they cycle up and down. That's driven by the fundamentals of the sectors and fundamentals of the macro. So that is kind of what I look for in gauging if something has the tailwind behind it or not. And that's what I teach on the website. That's also some things that we go over. This weekend, we'll be going over a few things with risk and companies. I want people to understand certain things because I understand it. I think everyone should understand it. That's part of the website and the community there. And I know you guys are hungry for that information and how to receive outsized returns. I think it is important to understand some of the fundamental backings of all this. It also ties into the technicals. Because if you understand kind of where you're at in the cycle, the technicals then become data or a validation that the fundamentals and the cycle is right. So you can use the technicals, you can use the herd and how they're creating these patterns to basically say this is where you're at in the cycle and give you kind of a orientation of where we're at. So I go into all that stuff, and that's kind of what we'll do here this next question and answer session on Sunday, 5 p.m. So if you're interested in signing up, Mayday coupon code is the coupon code if you guys want to save some money. All right, guys. So I've got for today. We'll catch you next time. This is Finding Value.